Hi, everyone. Thank you for joining us today. We are thrilled to have you all on the line as we launch the new climate change mitigation theme in the Navigating Impact Project, which is part of the IRIS Plus system. We are going to get started in just a moment. We'll give it about 2 minutes for everyone to log on, and then we'll get going from there. Thank you.
Hi, Lissa. This is MaryKate. Can I just do a quick sound check?
Hi, MaryKate. I can hear you perfectly.
Okay, great. Thanks for that.
Thanks. Can you hear me now? I think so. Okay, so we are getting started today to kick off the Navigating Impact Project Climate Change Mitigation theme. We are thrilled to be here today with all of you and with the Ceres team who are our partners in this effort. A couple of housekeeping notes to start. We are recording and we'll publish this recording to the IRIS Plus website. If you have questions as we go along, and I certainly hope that you will, please feel free to type them in the questions box, which should be in the kind of toolbar to your right. If you'd like to get involved as we go through with this theme or others, I'll send a link to that, and you can also see the climate change mitigation theme on the Navigating Impact Project website. And with that, Amit, can I invite you in to open?
Yes, thank you. Thank you so much, Lissa. And I'm really honored to be with all of you here today. This is a really important development and milestone in the trajectory of building the climate change mitigation theme into IRIS Plus. So this navigating impact process is absolutely important for us to get a richer and deeper understanding of the different strategies that can be used to help an investor and a company understand how they can measure their impact towards climate mitigation. And I couldn't underscore how big of an issue this is for the world. Of course, we are all captured and captivated by the COVID crisis that's unfolding around us. But while we're contending with that crisis, the climate crisis continues to rage on all around us. And in very visceral ways, as we can see with fires, wildfires all throughout the United States and other parts of the world, huge storms that are wreaking quite a bit of devastation, and then some impacts that are less visible to the naked eye, but are certainly affecting biodiversity and ecosystems and health along all kinds of dimensions. One thing that I think is so important about this work is that it underscores how the climate crisis is deeply systemic, and thus requires a systemic response. Many people often think about the role of addressing the climate change through, of course, the shift in energy transition, from fossil fuels to more renewable sources of power. That, of course, is part of it, but it is a multifaceted crisis, and one that requires a multifaceted response. And so one of the things that you'll see in the Navigating Impact work is that we're not just looking at how you generate electricity, but also looking at things like mobility, agriculture, carbon sequestration through forestry, soil, and other strategies, as well as manufacturing. So these 5 strategies will be absolutely critical to informing how investors think about the role that they can play in addressing the climate crisis. Now, of course, everyone on this call is already interested. I assume that's why you've joined us. But one thing I do want to underscore is how impact investors of all types should be paying attention to their role in helping to address and mitigate climate change. One of the things that's so important is that climate really underscores the interdependence of our systems. So it is not just an issue for environmentalists, but it is also an issue for people who are thinking about any number of dimensions of social and environmental challenges. So for folks who are thinking about addressing poverty and increasing the livelihoods for lower income populations, addressing racial disparities, gender disparities, and so on. All of these are affected and unfortunately exacerbated by the climate crisis. So this work is incredibly important, and I really do want to underscore why it's important for the GIIN. So the GIIN is designed and we are built to increase the scale and effectiveness of impact investing all around the world. And we are fundamentally trying to change the way that people think about investment. So that impact becomes part of all investing, so that any investor, large or small, thinks about social and environmental impact when they're making investment decisions. And in doing so, we can redefine fundamental terms like fiduciary duty, value, and risk, so they include dimensions of impact alongside the more traditional financial considerations. So this work is very much in support of that bigger vision, because if we are truly going to develop a world that is inclusive, just, and sustainable, we have to address the climate crisis. So I'll turn it over to my colleagues to dive into the details, but I do want to just thank a few people who've made this work possible. The team at Ceres, of course, has been an incredibly valuable partner to us and brings a depth of experience and knowledge that has been instrumental to this work. We are a network in our essence, and we always lean into that network dimension of our community, and that we've engaged over 180 stakeholders from around the world to help inform this work to date. And all of you who are participating are helping to inform it going forward. So I want to thank everyone who has been part of this discussion to date, and really ask that all of you play a role in helping us to really take this work and transition into IRIS Plus over the coming months. I'd also like to thank one group in particular, one of our partners in Asia, the Asian Venture Philanthropy Network, because they've been incredibly helpful in helping to do outreach to that part of the world, which of course plays an important role in addressing the climate crisis as well. So with that, I want to thank, last but not least, my colleagues at the GIIN who have been working on IRIS Plus and on Navigating Impact, and Lissa in particular, who will be kind of emceeing this call. But I do want to thank all of you for joining us, and thank you for the work you've put into this to date. And I do invite all of you to join us in helping to not only maximize the reach and impact of this work on mitigating climate change, but of course, to join us in our network and helping to play our role in addressing this systemic crisis. Thank you.
Thank you, Amit. I'm going to go ahead and share our screen again. And let's get going. So today what we're going to do is first just give a little bit of background on the Navigating Impact Project and IRIS Plus, which is where this theme is being launched. We'll then go through Ceres through a deep dive of what's in the climate change mitigation theme. We'll then invite 2 investors to speak, Andrew Collins from SFERS and MaryKate Bullen from New Forest. And then we'll have some time for questions, so please do feel free to type in questions as we go along, and we'll look forward to jumping into a discussion then. And then finally, we'll wrap up on what's next. And if you are interested in being involved, we'll tell you there how you can be. So first, a little bit of background on IRIS Plus and the Navigating Impact Project. Okay, I'm going to not share my video then. On the Navigating Impact project then, a little bit of background here. First, just about the GIIN. Amit shared a little bit more about this, but the Global Impact Investing Network, also known as the GIIN, is a nonprofit organization focused on increasing both the scale and the effectiveness of impact investing. That effectiveness piece is really why we're here today and what we're talking about. It's incredibly important if we're going to have an effective impact investing space ecosystem, that we know how to measure and manage towards that impact. The GIIN aspires to create a world in which all investments consider social and environmental impact alongside risk and return. So I'll take us back in history just a couple of years ago. This is about 3 years ago when we started reaching out to the industry, and the GIIN at this point had managed the IRIS catalog of metrics for a number of years, close to a decade. And what we were hearing from the industry was really a couple of key pain points in impact measurement and management. First, just that there was a lack of very practical how-to implementation guidance. Second, that there was a lack of core metrics, really a clear understanding of what you needed to measure in order to drive towards comparable data. And then finally, continued confusion and fragmentation. There are hundreds of tools out there to measure different items and process points, and it was quite difficult to figure out which ones were best practice in comparison to all of the others. So with this, with these pain points and this mandate, the GIIN developed IRIS+, and IRIS+ was launched officially in May 2019, so a little over a year ago. And it's the generally accepted system for measuring, managing, and optimizing impact. It builds off of the GIIN's 10+ years in offering the IRIS catalog and helps investors and others find core sets of metrics, key pieces of guidance, and examples for their own practice. To date, 1,300+ stakeholders have informed the development of IRIS+. Many of you on the line have been a part of this process, and it's very difficult to fit that many logos on one slide, so you won't see all of them here, but a good sample. IRIS+ is offered in alignment with 50+ standards and frameworks, and that's critical to this work because if we're going to be driving towards a common understanding of impact and comparable impact data, we really need to be able to translate between all of these different efforts that are out there in a common and translatable way, and that's what IRIS+ is designed to do. A couple of key features in IRIS+ include core metric sets, a very clear base of evidence, academic and field literature, along with rigor ratings, and then practical guidance and resources. An example of this being the recent use case that we did with Nuveen and Responsibility and Leapfrog, and then a number of other how-to documents, like how to use IRIS+ with impact due diligence. You may be wondering why I'm talking about IRIS+ when we're on the launch of a theme in the Navigating Impact project. So just to stitch those pieces together, the Navigating Impact project is where the GIIN and partners build content that then is put through a deep standardization and public comment period before it's offered on IRIS+. So today we are right here. We have finished the Navigating Impact project and are launching it on the site today. We will, in the next 2 months, be going towards a standardization and public comment period, so we'll welcome your feedback at that time. And then we'll be looking to launch this work in the IRIS+ platform as part of the generally accepted system for measuring and managing impact in Q2 of next year. So when you go to the website, this is what you'll see. This is what's going live today. I do hope you'll go there and click through. One note on just relationship between a couple of different themes. This climate change mitigation theme is designed to be a top-line, high-level strategic goal set, and it will relate in follow-on conversations with a number of other themes. Some are already available. There's a sustainable water management theme and sustainable forestry already within the system. And we're currently developing a couple of others, sustainable agriculture in partnership with the Croton Institute and we'll also be driving towards a clean energy theme led by my colleague Grace Earle in the coming months. Currently available in IRIS Plus are a number of themes, and as you can see here, there are 9 available in IRIS Plus, but we have quite a few in development. Water, sanitation and hygiene, quality jobs, and climate change mitigation are all available on the Navigating Impact Project website, and sustainable agriculture, racial equity, and clean energy are currently being developed in combination with a number of others that you can see there that we will be developing in the future. A number of stakeholders helped us develop this climate change mitigation theme. These are a couple of the logos, but you'll actually note up there that there were over 180 plus stakeholders who informed the development of this theme. And that's really important because as we are developing content like this, it needs to be tested from a number of different perspectives and angles in order to make sure that it can be recommended as the generally accepted way of doing this work. Within this theme, like climate change mitigation as other themes, it includes 5 strategic goals reflecting common investor aims. And each strategic goal includes 4 main parts. There's a summary of how investors and companies can make impact within that space, an evidence map, a core set of metrics or a starter kit, and then a series of links to best practices and tools that can be helpful to investors and in companies in putting this work into action. And with that, I will hand it over to the Ceres team to walk us through a little bit more on the Navigating Impact Project Climate Change Mitigation theme. Ceres, we are thrilled to have worked with you on this theme and honored by the partnership. And Lindsey, I'd love to ask you to jump in.
Thank you so much, Lissa, and good afternoon, everyone. It's wonderful to be with you here today. So I'm Lindsey White. I'm a director on the Ceres Investor Network on Climate Risk and Sustainability, and I've been a co-lead from Ceres for the development of this theme. So before I dive in, just a few opening remarks from the Ceres team. So on behalf of myself and my project co-lead, Dazzle Bhujwala, our sincerest thanks to the GIIN team for the opportunity to partner on this important work. We have been very pleased to collaborate with the GIIN in the development of this. And thank you so much, Lissa, for your incredible partnership and support throughout the development of the theme from our respective virtual offices since March. And thank you so much, Amit, for your partnership, for joining us for today's launch, and for your opening remarks. So we are very pleased to present today's theme. And as a final shout out, we also, on behalf of myself and my colleague Dazzle Bhujwala, fellow Ceres project co-lead, we would like to shout out our colleague Marcella Rizzuti, our project team core team member as well, for the development of this theme, for her excellent work on the development of this theme. Last but not least, a huge thank you to the more than 180 investor stakeholders who participated in the development of this theme and really brought their thoughts, their expertise, their experience in impact investing and implementation to bear on this resource, and really making it by design as much of a by investors for investors resource that we hope for it to be. And as Lissa and Amit mentioned, as we go into the public engagement and comment period as well, really encourage your continued participation as stakeholders in this effort. Last but not least, just wanted to thank everyone for joining us on the line today. We are experiencing certainly a historic and unprecedented moment in time when there are many things demanding our attention. And as Amit mentioned in his opening remarks, we are deeply grateful for the participation in this project and for the steadfast commitment by so many investors across the globe to climate change mitigation efforts, and really forging a sustainable planet for this generation and for generations to come. We would also as well like to thank the Asian Venture Philanthropy Network for their integral involvement in this work. So as we launch into today's discussion and presentation, We'll be sharing a few words of background about Ceres and about the development of this theme. So if we could go to that next slide. Excellent, thank you. So a few words on Ceres. So Ceres is a sustainability nonprofit organization, and we work with the most influential investors and companies to build leadership and to drive solutions throughout the economy. Our mission, nothing less than to transform the economy to build a sustainable future for people and the planet. And we are delighted to collaborate on this theme towards that goal. We could go to the next slide. Thank you. So what are the ways that Ceres works towards that goal? So one of the key avenues is through the formation and mobilization of interrelated networks. And so through these powerful networks and advocacy, Ceres tackles the world's biggest sustainability challenges, including climate change, our founding focus, water scarcity and pollution, and inequitable workplaces. And across these 4 networks, Ceres has amassed a really considerable consortium and quorum of influential investors and companies. So in our networks, we have a wide variety of both investors and companies, and importantly, as well as the different networks, there's a lot of interrelation between these networks. So for example, we work with investors in our investor network to enter into stakeholder engagements with companies in our company network, roughly 75% of which are in the Fortune 500, to look at avenues for sustainability leadership and really encourage that two-way investor and company dialogue towards more sustainable corporate practices. So it's important that both as we work individually with investors and companies across these networks, they also, of course, work across networks, and we support that engagement, just recognizing that tackling climate change, tackling water scarcity and pollution, and really all of the sustainability challenge that our world faces are ultimately multi-sectoral. And if we could go to that next slide. Excellent, thank you. And so looking and taking a deeper snapshot at the Ceres Investor Network on climate risk and sustainability. So this network was established originally in 2003. So one of the earliest networks and kind of gatherings of investors really focused on climate risk. So not as an off-balance sheet risk, not as an externality, but really as fundamental to investment policy and practice. So we established the network in 2003 at a convening at the UN headquarters in New York. And since that time, and that founding with 10 founding pension fund members, we've grown considerably and diversified the network quite a bit in terms of investor type. So today, as of the time of today's webinar, we have 178 members, in aggregate having more than 30 trillion in combined AUM. And these are both asset owners and asset managers in the US and in Canada. So our network covers North America. We also partner with sister networks in different geographies, including Asia, Australia, New Zealand, and Europe. So really looking at bringing that unified investor voice to bear on climate change and on other important sustainability challenges and opportunities. And we maintain working groups that are focused on climate change, again, our founding focus for the network, and on other sustainability challenges. So those include water, include biodiversity, and ultimately there is quite a bit of thematic expansion that we've gone through for the network, and that's a driver of really the work we do today with our investors. And last but not least, the investor members within our network have the opportunity to participate in key Ceres initiatives. So these include engaging with companies through both stakeholder and shareholder engagements to really encourage sustainable progress and practice. And it also includes looking at their own portfolios and the type of work that we're talking about today. So looking at both mitigating climate risk and also looking at climate-related investment opportunities. We know that is a critical linchpin, that investor leadership, that looking at climate change, both from the risk and the opportunity side, to moving us forward towards that Paris pathway. So in terms of a quick snapshot of our members, we work with the largest public pension funds in the US and Canada, some of the largest asset managers in the world, leaders in sustainable and impact investing. And our members range from those largest pension funds to family offices, foundations, and academic endowments. There's quite a range, but certainly the unifying force is that genuine focus on impact and sustainable investing, really looking at the risk and opportunity side of the equation and using that investor leadership to drive forward to create a sustainable world for people and the planet. Last but not least, there is, as Amit rightly mentioned, a great deal of intersectionality among the climate change drivers that we look at and among other issues that impact investors, that companies, that all of us in our roles are looking to address. So ultimately, we know as we looked through and we developed in partnership with our investor network members, with members of the GIIN and with all of our stakeholders, this theme, we really did take that intersectionality into account. So as you'll see, the metrics that we walk through are very focused on GHG emissions mitigation, but certainly recognizing that there is an inherent intersection as the pandemic and other crises this year has certainly laid bare further between climate change, between racial justice and equity, between gender equity, between tackling poverty, and other kind of key issues facing our world today. So in recognition of that intersectionality, we encourage all of our investors, as Lissa mentioned, to also take a look at the other themes within the GIIN, which are certainly linked to our work here in very, very real ways. So with that, I'm pleased to turn the virtual mic to my colleague, Dazzle Bhujwala from Boston here over to the Bay Area for a presentation and deep dive on the first of those 5 strategic goals. Dazzle, over to you.
Thank you, Lindsey, and thank you, GIIN team. I'm Dazzle Bhujwala, Director, Investor Network at Ceres, based here in California, San Francisco. Amit has already laid the foundation for why mitigating climate change at this time has become even so important and critical. And if anyone still doubts the science behind climate change, you are welcome to California, where just this year, we have had a record-breaking 8,500 wildfires burning over 6,500 square miles. And fires are still burning, literally as we speak, and this is not an isolated reality of California. We are seeing extreme weather patterns around the world. So let's look at, let's dive straight into what mitigating climate change theme consists of. Can we have the next slide? And maybe if I can go off camera so that participants can have a better view of the slides. Climate change is the next big systemic risk investors should be worried about and should assess their investments from both physical risk that can occur due to extreme weather events and transition risk, mainly due to change in policy, technology, or consumer preferences. And either of these risks can have significant economic consequences on institutional portfolio or even on savings of an individual pensioner, besides impacting the lives and livelihood of millions. And if we look at the chart on the right, science has been clear and transparent in saying that if we have to limit irrecoverable and severe impacts of climate change, then we need to limit global temperature rise at 1.5 degrees centigrade. And in order to be on the pathway of 1.5 degree, the climate math done by McKinsey shows that in the next 10 years, we will have to reduce net carbon emissions more than 50% and other greenhouse gases by 40% relative to 2010 levels. And so here the question should not be why, but it should be how can we mitigate climate change and how urgently? If you are an investor, you should be asking the following 2 questions for every investment that you are reviewing or allocating new money to. Can we have those 2 questions on this slide, please? Is your investment resilient from financial risk posed by climate change? And the second question that you should be asking is, how is your investment limiting or reducing the risk of climate change? Next slide. So for us to remain on the 1.5 pathway, it is important that investors focus on sectors that contribute the maximum to global greenhouse gas emissions. Sectors such as transportation, electricity and heat, manufacturing, and agriculture contribute to over 75% of global emissions, and hence they are our first 4 strategic goals to mitigate climate change. Number 1, mitigating climate change through clean mobility. 2, mitigating climate change from electricity and heat production. 3, sustainable manufacturing. 4, sustainable agriculture. And irrespective of at what speed and scale we decarbonize these sectors, we will still need to deploy technologies to capture carbon from the atmosphere to ensure we don't miss our 1.5-degree target. And for that, our 5th strategic goal happens to be carbon capture and sequestration. While all this may sound very daunting, it creates immense investment opportunity if we start reimagining the way we commute, the way we produce and consume, what we eat, how it is grown, and how we can reduce the waste. Next slide. So let's look at our first strategic goal, which is mitigating climate change through clean mobility. Investments aligned with this strategic goal aim to reduce GHG emissions by offering affordable and equitable climate-friendly modes of transportation for both passenger and commercial use. Thereby, we are not only mitigating climate change, but are maximizing economic opportunities and improving overall quality of life. While the primary problem that an investment should aim to address in this theme is to reduce the dependence on fossil fuels, the transition to clean mobility cannot be looked in isolation. Today, 1 billion people lack access to all-weather road and transport services. So is your investment helping people who do not have access to transportation and are deprived from going to school or to work or at times even to a hospital? Or is your investment catering to a niche segment of the society that only a few can afford? And investors need to ask these questions when they are deploying capital to any kind of investments in clean mobility. More electric vehicles will demand more electricity. The question next should be, how is this electricity generated? And if it is renewable, are the cost of upgrading the grid distributed evenly among the ratepayers? And if so, then are they putting low-income communities at a disadvantage? And these are deeper questions, every investor should be asking themselves before allocating capital. Beyond accessibility and equity, investors should consider if this investment in clean mobility will generally improve efficiency, will reduce or lead to better safety by reducing road accidents, and would be more healthier by minimizing noise and air pollution. Let's look at an example, of one of the companies, who is trying to solve many of these problems. As most of you may know, that scooters are the most common mode of transportation in Asia and Latin America, and they produce more pollution than cars, and they are often the biggest source of noise, pollution, and congestion in cities. To overcome these problems, Gogoro, a Taiwanese company, manufactured all-electric smart scooters whose rechargeable batteries can be swapped within 6 seconds without going through the conventional way of charging a vehicle. Within the first 3 years of being on road, Gogoro scooters have collectively ridden 240 miles, avoiding 16.5 liters of gasoline and offsetting 35,000 tons of carbon emissions with zero air and noise pollution. And that is some impact. Gogoro has already attracted investments from investors like Temasek, Singapore's sovereign wealth fund, and America's former Vice President Al Gore's investment firm, Generation Investment Management. Some of the metrics as part of this strategic goal are measuring GHG emissions mitigated, measuring GHG emissions of products replaced, emissions avoided, average traffic, average daily traffic, passenger satisfaction, and these are just a sample of some of the metrics that we have listed over here. You'll be able to see more, as you go on the IRIS Plus site and figure out what are the other metrics that investors can really dive deep into and measure the impact of their investments in this particular strategic goal. Next slide, please. Our next strategic goal is mitigating climate change through clean electricity and heat production. Investments aligned with this strategic goal aim to reduce GHG emissions resulting from electricity and heat generation while shifting global energy usage away from fossil fuels towards low and zero carbon energy alternatives. The investments also aim to accelerate energy efficiency solutions. As we saw in the earlier slides, electricity and heat contribute to nearly a third of global greenhouse gas emissions. And even today, 1 in every 8 people in this world lack access to electricity, depriving them of basic human rights. The right to a child, or right, for a child to study or read a book after the sunset. The right to eat healthy because they cannot even refrigerate their food, or the right to access basic medical treatment as hospitals can't even function without electricity. Investors often forget that one of the easiest, proven, scalable, and quantifiable way to reduce emissions is by focusing on energy efficiency. Increased energy efficiency can reduce global electricity demand by 20%. Let's look at an example, of one of the companies, or rather India's largest clean energy independent power producer, Renew Power. Renew Power generates over 5.5 gigawatts of renewable energy with an additional 4.5 gigawatts of projects under construction. With its 100 plus wind and solar plants, Renew Power is generating 1% of India's overall electricity and mitigating 0.5% of India's total carbon emissions. With its utility scale and over 450 distributed solar projects, Renew Power is generating electricity which has been transmitted to over 1 million customers, and they have generated over 85,000 jobs over the last decade. Canada's largest pension fund, CPPIB, has taken a minority stake in Renew Power. These are some incredible investment options and real examples that are out there. And one of the reasons for us to select these 4 sectors is not only that they are contributing to maximum greenhouse gas emissions. These are the 4 sectors where today there is proven technology and scalable investment options available for investors to quickly ramp up their investments for mitigating climate change by investing in some of those. The next 3 strategic goals, Lindsey, I invite you back to take the participants through the next 3 strategic goals.
Thank you so much, Dazzle. So I'm pleased to present our final 3 strategic goals, and then we will be turning to our investor guest speakers to talk a bit more about how they use the IRIS Plus methodology and how they're applying this climate change mitigation theme. So our 3rd goal of 5 is looking at climate change mitigation through sustainable manufacturing. And as we look at manufacturing as an input to global GHG emissions, it is a considerable contributor. So investments aligned with this 3rd strategic goal aim to decrease those emissions from manufacturing. This is through such pathways as decreased energy use, increasing the length of use of items, and recycling, refurbishing, repurposes, or upcycling. So if we look at manufacturing as a subset of industry, it accounts for about 12% currently of global GHG emissions. And the double-edged sword in manufacturing, or one of the challenges, is that manufactured products are often also key components of products that themselves fight climate change. So if we look at the need to rapidly scale interventions such as sustainable energy, renewable energy, and as we look back to the previous theme of heat and electricity generation, really making manufacturing processes more efficient as we seek to produce those necessary components to other products that fight climate change is truly essential. And as we look at an example, one of the many manufacturing subsectors is textile production. So fast fashion is a considerable contributor to this problem. And if you think about the implications that every garment today costs roughly several times its own weight in GHG emissions, the implications of those consumer trends and that impact are pretty profound for global climate change. So our example in that vein is a leading business called Evernew, which is at the forefront of the circular economy. So Evernew's tagline is really that this is, quote, the end of the end for textiles. So they look at breaking down garment waste to the molecular level and ultimately converting those polymers to new fiber that can be used to produce high quality new textiles. And so they are looking to tackle both the emissions problem, and when you look at the scale, again, roughly 92 million tons of waste annually from fashion is a key contributor. And there are many other manufacturing subsectors as well, including, of course, iron, steel, and cement production. And we encourage investors to take a look online at those added examples. In terms of metrics, key metrics to keep in mind are GHG emissions mitigated, emissions of a product replaced, and energy conserved. If we could move to the next slide. Thank you. So our fourth strategic goal is sustainable agriculture. And investments aligned with this strategic goal help to reduce or mitigate GHG emissions generated by agricultural activities and support the global transition to sustainable agriculture and sustainable food systems. So again, as we look to the strategic goals and investor themes, this is a critical one. So looking at percentage of GHG emissions from agriculture, roughly 18%, that's inclusive of forestry and land use as well. And as we look again at intersectionality as we have throughout these themes, sustainable agriculture also has profound implications for human health. So as we look at investments and really making our food systems more sustainable, we must also take into account issues including accessibility, looking at issues such as food deserts, and really making sure that as we make that investment, needed investment for GHG emissions, for that transition to sustainable production and consumption of food, that we also keep in mind intersectional and critical issues such as accessibility and affordability as concerns sustainable food products. So our example is Appeal Sciences. This is a company that is really at the forefront of tackling food waste. And food waste is a critical issue under this theme. Statistics have shown from the UN and other sources, if food waste were its own country, it would actually be the third largest emitter behind only the US and China. So this is a critical problem, but also a critical opportunity really to tackle climate change. In our example here, German retailer group Edeka found a 50% reduction in just avocado food waste via use of Appeal. And investors thus far have included and not limited to DBL partners, Upfront Ventures, and S2G Ventures. And as we look at core and additional metrics, again, GHG emissions mitigated, land indirectly controlled and sustainably managed, crop type, and GHG emissions reduced, and others available online. I encourage you, again, to take a look there. And then if we could move to our final strategic goal. Thank you. So our final strategic goal, as alluded to earlier, is that given current emissions trajectories, just forestalling future emissions will be insufficient to keep the world on a 1.5 Celsius pathway. So our imperative here is really to look at not only how can we forestall future emissions and decrease them, but how can we also capture, utilize, and sequester carbon that is already in the atmosphere today. And a point of note that this is looking beyond nature-based solutions. Of course, forests are a critical carbon sink, and we'll be hearing from MaryKate Bullen in a moment on that note. But really, we also need to explore at this point technology-based solutions. And this goal is really looking at that imperative. So our example here is Carbon Cure Technologies, which seeks to improve sustainability and production efficiencies of concrete. And it actually injects CO2 into concrete, thus utilizing and sequestering it. So to date, more than 80,000 metric tons of CO2 emissions have been saved with Carbon Cure. Investors include Breakthrough Energy Ventures, among others. So with that, I am delighted to turn the virtual mic over to our investor practitioners. And first up, we are joined by Andrew Collins. Andrew is Director of ESG Investing for the San Francisco Employees Retirement System. So with that, I will hand the virtual mic back to the West Coast. And Andrew, thank you so much for your work and for joining us today.
Thank you, Lindsey. Yeah, really great to be here and to join for this call, but also to have participated in this process to develop out these different strategic areas and the frameworks behind them. So yes, I'm the Director of ESG Investing for the San Francisco Employees Retirement System. We're the public pension for the consolidated city and county of San Francisco and manage about $26 billion across asset classes. And as Director of ESG Investing, I'm not a portfolio manager, but really work across asset classes with our teams to integrate ESG considerations into the way that we invest. And climate change really is, our core focus for all the reasons mentioned, the systemic nature of the risk and its pervasive impact really across asset classes, geographies, investment types, and industries. We recently announced our intention to be a net zero emissions asset owner by 2050. And we're on our pathway to really think about, measuring our total impact and then beginning to take additional steps beyond what we've done already to begin to reduce that on a trajectory that gets us to net zero by 2050. And we've found that the IRIS Plus methodology and these mitigation themes and the metrics contained within them are going to be really helpful for us as we think about the right ways to measure across our portfolio our greenhouse gas mitigation efforts, how much we have invested against the different mitigation themes. And I think this is really, what we see as a turning point of having a good sense of how to measure our carbon footprint and emissions and contribution to climate change across our portfolio and a sort of existing body of metrics and methodologies. But really, this is filling, I think, an essential gap for us as we think about, looking at a core metric like greenhouse gas emissions mitigated that we can measure across different themes to begin to sort of piece together the necessary steps to achieve our net zero by 2050 goal. But I think it doesn't stop there. As an allocator, we're seeing more and more impact reporting coming from our external managers, and this is both for ESG themes as well as traditional investments. And so I think we plan to use the mitigation themes, the metrics, but also I think the impact risk and evidence map tools to really benchmark and measure our external managers in the reporting that we're getting. Certainly encourage them to align with the IRIS Plus methodology if they're not already doing so, and as a good way for us to begin to enhance our due diligence on impact measurement. To date, in terms of investments that we've made, they've really been centered around I think three themes within those that were presented by the Ceres team, specifically clean mobility, electricity and heat production, and sustainable manufacturing. And we've, honestly seen less investable opportunities in climate smart agriculture and carbon capture and sequestration. But I think, as we look towards this truly net zero goal of ours, we are looking for investable opportunities specifically in those areas, hoping that the ecosystem emerges to find the right opportunities for an institutional investor like ours with our target rates of return, fit within those themes, and certainly seeing carbon capture and sequestration as an essential area, based on most projections that we've seen to truly achieve net zero. A few examples of investments, we currently have here. These are more dedicated, impact-oriented funds. But one is Vision Ridge. That's a fund that invests in a range of sustainable assets globally, with a concentration, in North America. But that's everything from EV charging to solar energy to energy efficiency software providers. Another is Denim International Power Fund that includes solar, wind, hydro assets, and certain gas-fired generation in Africa, Latin America, Southeast Asia, really trying to meet unmet energy access needs, but at the same time do so in a clean way and in a sustainable way. So, early in our journey, I think still, like many others, but finding these tools incredibly useful and certainly necessary as we make good on our investment goals to get to net zero.
Thank you, Andrew. That was incredibly insightful, I think, and appreciate you joining us on this call today. MaryKate, could I invite you to jump in as well? And I'll switch the slide for you.
Sure, thanks, Lissa. And I know we're coming up on time, so I'll try and keep my remarks a bit brief and constrained. Just to give folks a quick introduction, New Forest, we are pleased to be both a Ceres and a GIIN member, so it's been a real joy to see the collaboration happening throughout the past year or so as the Navigating Impact has looked seriously at climate change mitigation. But New Forest has also been closely involved with the IRIS and now IRIS Plus team for a number of years, and I thought to add a little bit of diversity to today's topic, it might be helpful to provide some reflections from our asset manager perspective. So we're a sustainable forestry investment manager. We have around 1 million hectares of forestry and conservation investments around the world, and that's about 4 billion in AUM, just for context. And when we think about our mission as a company, I love seeing the Ceres mission because our vision is closely aligned. Our vision is to see the forest sector helping to lead the transition to a sustainable future. And it's obvious with the forestry and agriculture land sector, providing that 18 to as much as 25% of emissions we see as estimates coming from land use, that there's a real problem and change we need to see here, where we're actually flipping from being net emitting sectors to being net sequestering sectors, as well as conserving the existing carbon stocks that we have in the world. So I wanted to reflect on how Navigating Impact and how IRIS Plus are useful to us from that perspective. We had the benefit of seeing the Sustainable Forestry Navigating Impact come out earlier, which now has the core metric sets that are live and in action. So I thought as we're looking forward to the climate change ones coming on board, I might sort of share some of the ways in which we're using sustainable forestry and how we're looking at using the climate change themes as well. So you might have seen the sustainable ag included forestry. There's actually a cross-reference into those existing sustainable forestry metrics, which is just a useful reminder that one impact doesn't happen in isolation. There's actually a variety of interconnected impacts that we can find through the IRIS Plus system. And that's where having both core metric sets as well as additional metrics becomes extremely useful to us as a manager, because we can say, what are the headline figures that we want to report and manage, but what are also the other figures that are important to stakeholders? What might those have to do with something like an environmental or a social safeguard, which is very important when we think about nature-based climate solutions. So with New Forest, we have this dual interest in understanding our total impact in terms of how we're managing core forestry investments, but also with the additional impact that comes from really focused interventions on climate. I wanted to highlight that the IRIS Plus metrics become very useful for communicating these in a standardized way. Throughout the slides today, between particularly Dazzle and Lindsey, we've seen a few of these metrics referenced. That in forestry and land use, we see emissions reductions, how we're changing what's happening. So here you see a landscape of a carbon forestry investment in California, where we're managing this landscape for both timber and increasing carbon stocks over time, and able to actually monetize that climate mitigation through California's cap and trade market with a carbon offset project. So in that case, you may see an emissions reduction from a baseline where a prior owner may have harvested this at a more aggressive rate. If you're looking at this picture, you can see these patches of cleared areas where you also see retention trees in a landscape. So this is something that's aligned with more of like a Forest Stewardship Council aligned retention landscape, where we're actually keeping biodiversity and carbon together in this landscape, so we can manage for both timber and carbon. Another one of those metrics is avoided emissions. So if you shift to thinking about what New Forest does in Southeast Asia, how we might think about if we are investing in an area that another commercial actor might actually clear rainforest to plant a plantation, which seems like a silly idea, but is actually commercially profitable in today's markets. We instead want to look at avoided emissions from protecting that rainforest and how we can spare that by increasing productivity on another area. Another key metric in thinking about this for us is the emissions sequestered. To give you a sense of context here, across the New Forest portfolio, we have around 135 million tons of carbon dioxide equivalent in the production forest areas we manage. What does that mean in terms of annual impact, though? Our carbon offset projects produce over the past couple of years between 2 to 7 million tons of offsets. So those are two very different things, looking at how much carbon stock do we manage to preserve versus what's the impact that the climate experiences in a given year. And when we look at the IRIS Plus metrics, the themes really help us break that down into a few pieces. The other thing I wanted to reflect on as an asset manager, and it struck me when Lissa shared the slide of the 50+ standards that you align with, I just have to say thank you. As someone who leads the sustainability program, including ESG and impact at an asset management level, it's pretty mind-boggling and intimidating to think about keeping pace with all of those standards and systems, which are thankfully constantly evolving and improving, but really, really hard to keep up with. So we can look as a manager to IRIS Plus and to navigating impact to help us walk through those themes. The fact that I can go and look at the theme of mitigating carbon emissions from forestry and land use and automatically see how to translate that into the impact management project framework and talk about things like contribution to impact, how much and who's experiencing the benefit becomes very easy and gives me a language that I can then take to our clients. And this is actually coming up more and more in due diligence. I think folks on the impact side will be happy to hear. We've now received questions just in the past 2 months, 3 different impact DDQs where we were able to use IRIS Plus aligned metrics to provide answers. And 2 out of the 3 of those asked about impact risk. And we could refer right back to navigating impact into the IRIS Plus core metric sets about the types of impact risk that align with the strategic goals we're pursuing. So I'd encourage folks to really dig into both of those sets of resources, the navigating impact information that's out now for climate, and to participate in looking at those new core metric sets, because those are something that really help us have a more common conversation between managers and asset owners, so that we can also understand what are you seeking in your portfolio and how does our style of asset management help us arrive to that. One sort of forward-looking improvement for us as this information continues to become available, New Forest, our job, and my job in particular, my colleague Emily and our sustainability team, is to translate these resources and external toolkits into things that our funds teams are able to use. So we're working on things like how do we set ESG targets strategically within the annual planning cycle for all of our real assets investments? Well, now we're able to actually refer back right to IRIS Plus and to show folks how we can set appropriate KPIs for those targets using metrics that are appropriate for the strategic goal we're pursuing. So this is really exciting for us. It helps us be more consistent. We're no longer kind of going it alone, trying to create a framework that works for us, but we're now able to communicate that with a way that makes sense for everyone from an asset owner to the size of someone like Andrew and his organization, through to specialized impact investors who just want to understand what could they possibly do with nature-based solutions. I understand we're just on time, so I'll pass it back over to the GIIN and Ceres team.
Thank you so much, MaryKate, and appreciate all of the thought that you and your team have put into your approach. Always good to hear from folks about how this is and might not yet be working for them. I think in the interest of time, we're going to skip questions, but we will follow up with those of you who have sent questions in the box in an email after this. We want to make sure that we're getting to those and apologize for the tech issues that are kicking us forward on time a little bit. Very briefly, next steps for this climate change mitigation theme, we will be opening up to a public comment period in December. If you're interested in being involved and providing your thoughts as we get into that part, please do go to iris.thegin.org/collaborate. We chatted that link earlier in this session and would love to have you involved. And then we'll release, based on all of that feedback, the final version in Iris Plus in Q2. For the sake of time, I will skip most of this, but just to mention on the GIIN side that we do have a number of ongoing opportunities to get more information on Iris Plus and see how it's being used. Demos, webinars, lots of guidance, very practical and how-to is always our goal. We also just launched a new report or study on understanding impact performance and financial inclusion and agriculture, which takes impact performance data from a number of different investors and starts to understand comparing different investments and starting to learn what actually are we achieving through impact investments within these spaces. Number of themes coming up, and then if you're interested in learning more about the GIIN's membership, there's a link there. You're welcome to reach out to me afterward. Lindsey and Dazzle, can I invite you to share next steps on your side?
Okay, Dazzle, I think you may be on mute there. Lissa.
Sorry about that. Yeah, just quick last few points. If you would like to check about the Ceres Investor Network, the link is right here. Feel free to reach out to Lindsey or myself. Apologies for not being able to take questions right here, but as Lisa said, we will follow up via email for whatever questions has come on. But we also encourage you to participate once we open up for the public comments, and we look forward to your inputs and insight. And lastly, we also encourage you to check out the Ceres 2021 virtual conference scheduled for March 22nd to 26th. It should be live in a few days from now, and encourage you to participate and join like-minded investors for an in-depth discussion on climate and other issues. Thank you very much for your time and chiming in and listening in today, and we look forward to a continued relationship with everyone. Thank you.
Thank you, everyone. Thank you so much for joining us. And we hope to see you perhaps in March virtually for our virtual conference, Ceres Conference 2021. And sincere thanks again to the GIIN for their partnership. We look forward to following up with questions and continued engagement on the theme. And we're delighted to share this today and to put it out into the marketplace. And thank you so much, everyone, for your continued work on climate change mitigation.